You're going to see me real vulnerable,
Mm-hmm.
Jason. I'm
No.
already getting there.
Okay, we're going live now. Hello, and welcome to Jason Cavness Experience. I'm your host, Jason Cavness. Our guest today is Shaydi DeJesus. Shady, are you ready to be great today?
Yes, always.
Shaydi DeJesus is a multidimensional, diverse superstar with demonstrated history working in national, global innovation networks, entrepreneurship, commercialization, venture capital, and alternative investments. She is currently the city lead for Bunker Labs Austin, the SoGal Austin city lead, and a venture partner, Giddy Inc. Shady, thank you for being here today. I really appreciate it.
Great. I'm excited to be here too.
So, Shady, let's talk about some of the non-VC, non-tech. So somewhere, I think it's on your social media somewhere, I don't remember where I saw it. There's a picture of you in Alaska in your waders and a big halibut. Tell that story.
Yeah, so I obviously grew up with the guys, and so I'm very into the outdoors. That was one of my first fishing trips in Alaska, and obviously have to represent. So Spurs attire and my waders, and I actually caught an 80-pound halibut that day. And so it took me about 30 minutes to reel it in. But if you imagine deep sea fishing in Alaska, it's just one of those amazing experiences that you have to show off every now and then.
Was that your first time doing that?
Deep sea
Yeah.
fishing? Yeah. Because I mean, when you're from Texas, like all you catch is like what 3-inch
Bass.
tilapia. No, just like those little mini fish. So it was really exciting. And obviously the guys wanted to, you know, reel the fish in themselves, but I was pretty committed to showing them off.
So how did you get involved in what you're doing now, the tech field, investments, VC?
It's definitely been a long ride, I'd say. Early on in my career, I started off in wealth and asset building. So it's the lower end of the spectrum. When you're thinking about alternatives to VC and angel investing, there is just, traditional lending. There's microfinance, depending on where you start. So I started my career off there, doing that nationally. And then as I moved across the country, I started picking up from different ecosystems the way that they both were engaged in tech and innovation, as well as the different type of investment streams that they came through. So it's been like a 10-year journey.
So what's your definition of tech?
I guess it really depends. So if on the region, I particularly, when I say tech, I just reference, your computer software here in like the Austin region, right? They're heavy in tech. And then obviously innovation in other areas is going to be a little bit different. So I throw those in together, tech and innovation. But most people, are going to say that it's just strictly like software.
Shady, can you talk about what is an investable company? Because, I think this stats only 1% of companies actually get VC, and that's really no guarantee of being successful anywhere, right?
Mm-hmm.
All the hype, get VC. But from your point of view, what is an investable company?
So obviously investments is going to depend on the person providing the capital, right? There's investable at different levels. And so depending on where your company is at in the stage, it's something that can return the growth. So depending if it's a 10X, if it's a, 5X or a 3X return, it's a company that is, basically when you give them money, you're literally going to be lighting fire to your company, and the VCs are going to want you to perform. And so what that means, it's you both personally are ready to scale yourself. You're ready to manage a huge team, and then also then go out and capture customers. And so investable for that sense would mean that you're ready to, expand your company.
So when you're personally looking at pitch decks, people are pitching you, trying to, get investment for you and your, your network. What's your like focus point? Is it team? Is a product? Is it, traction? Is it combination, or is it something totally different?
For me, since I'm in the early stage, pre-revenue and, some post-revenue there, I have such a wide experience that I can understand, even if someone is not pre-revenue, like where they can fit. So often you might see a one-time co-founder by himself. He's not probably capable of growing this company. But you know that he can find a team and following. So for me, it's always a team. And then also like the depth of that relationship is to understand that they're going to be in it for the long haul. It's really easy, I think, to tell when people are in it just for the money, or their perceived notion that, oh, I'm just going to get $1 million and then, things are just going to fly off, from the get-go. And that's really not it. Most folks that you can see, they've raised, even if they raise a series A or B, like they literally are still grinding it out. Like it's not, an investment is not a miracle, right? So for me, it's always team. Then obviously, basically the market itself, if there's leeway to like pivot into different areas, like that's always a positive. It's not like it has to be this one product and this has to work, because if that fails, then everybody's, I guess, up shit's creek, I guess is
Yeah.
what it says, both the investor and yourself.
Yeah, I think there's so many examples of failed investment, right? I think Quibi raised like so much money, right? And they failed after 6 months. And like if Quibi failed, like, like, man, they had all this, people on their side, all this money coming in and they still failed, right?
Mhm. Well, and when you see some of those companies, I think that's why it's really important for the founders to understand what type of capital and support that they need. Especially in this time, it's like there's a lot more money flowing than, obviously for the startups. And so you want to pick the right relationship. If sometimes VC will make you fail in a sense, because they're expecting such outsized returns that you're needing to ramp up your team, you're needing to ramp up the product in such a short amount of time that if you miss the mark, it's almost like you can't go back and reallocate the 1 million that they gave you. Like you're already you're in it.
Yeah, you're a partner for life pretty much, right?
Correct. And you get your investment and you're driving, and if you drive in the wrong direction, then it could cause you to fail. And so that's why sometimes you see large failures as well.
So from your point of view, so how I put this? So, and they always say, if you're, for founder, pick your VC correctly, pick the right one. But okay, right. Not many founders have the luxury of picking two or three investors, right? They gotta, take the money, so to speak.
Mm-hmm.
So how do you protect yourself? You've been trying to fundraise, nothing comes up. Some angel offers you like $300,000 for like 30% of your company, right? You're like, man, this is kind of shitty deal right here. But like, do I take this money? Do I give it up? Like, what's your advice on that?
Oh, that's a hard one because, we all want the money sometimes. Being in the same, on the other end as well. My like the biggest thing there is like to start early so that you do open up like those options in advance. You don't want to be struggling to take whatever's given to you because it's pretty evident. If you come in and you pitch and you're just like begging, like the terms are not necessarily going to be in your favor.
Mhm.
And so in that sense, I always suggest that startups and founders is align yourselves both with, you're networking with investors, but also network with experienced operators, even if they're not in your field, because they've already raised rounds, they've already done these negotiations. And so, but if that comes across, there's a point where you have to say yes and move on, right? You can't continue to like drag your feet if your burn rate and you're about, to fail without the capital. But it's be smart about it. It's also be smart about the milestones, is start tracking those milestones, because you're able to see, okay, if I get $200,000, it'll get me to a point where I could start just continuing to generate revenue on my own. So I might not necessarily need 1 million. I might need somewhere between like 3 and 500,000. And so that's a little bit better for you, is, tracking like what that looks like.
So that's a good question. Like, I think a lot of founders have trouble knowing what to ask for, right? It's like you ask for everything you want, all the people you want to pay salaries for, all the, tools, the software, the marketing gizmos, whatever, and go all out, potentially scale even faster, or you like do conserve, like, only pay what you need. Like, I think there's a big disconnect on that, right? And of course, you gotta, consider the fund, how much they're investing in stuff too. But I think a lot of people say, should I invest for like, ask for $300,000 or 3 million, right?
Mm-hmm. Yeah, so a lot of times they struggle with figuring that out, and I often see that with founders who have not aligned themselves with other operators that they can kind of get feedback from, right? Because both your investor and likely your advisor is only going to know one portion of what you're of what you're pitching and working on, right? They might know the industry, they might know the stage. Generally, they're aligned by, stage and the vertical. That's why you would go pitch them. Angels themselves, they really like want to dive in and assist, right? But they might not know like what these milestones and how to capture the customers in the sense. And so, there's a couple of things that you should have your shop in order. Obviously, your legal, your accounting should always be, pretty laid. And then the next I would say is like these milestones. So if you have a fractional um, CFO is always good, depending if you're growing. Someone in the industry that can kind of help determine what like an evaluation would be great.
So how frustrating is this for you? Like, because it's like most VC angels they have on the website, we invest in this or we don't invest this. Right? The philosophy is pretty clear on there,
Mhm.
but it's not found to still like spray everyone, right? Like if you're invested, you only invest in B2B, they'll get like emails or calls from people with B2C or I only invest in seed round, I'm a B round. Like how much frustrating? It has to be frustrating. I would think, like you can't take the time to read my website and like, what are you doing, right?
Yeah, it's really interesting because you see folks that like deliberately do that because they're trying to make a relationship in advance, and then so it's hard to tell because if you're not following maybe like a very approachable email that kind of lays out your metrics, you really have to kind of dive into these pitch decks and figure out like where people are going. So it is, I would say, frustrating at that time, but also on the investment side you're trying to build relationships too with founders, and so you obviously, if it's in that particular industry, you want to see that it's out there. So it's like this catch 22, I think.
So follow up question, like I see some VCs are like they're pretty much like never email me, never cold email me, never cold call me. If there's no referral, don't waste our time. And other people I know were like, I'm looking for deal flow. If I just say no to everyone, I won't have deal flow. So email me, cold email, whatever the case be. What's your point of view on that?
It's really getting to know that particular investor, right? If there's somebody that really does not do cold email, then you don't want to kind of frustrate them. But the times have changed now, especially with COVID, and also with diversity. It's hard to get a warm referral, so most folks are really opening up the doors these days. So I would say if try the cold email, if it's aligned in your industry. If you can't get a warm introduction, know where they are socializing, right? So if you're following their social media, you should know who they associate with on a constant basis, right? They're tagging them, they're on panels with other folks. And so there's a lot of ways, I think, right now is to prep yourself for future capture. Everybody's visible online. And so you can start to dive into those networks with, your second and third relationships.
One thing I think is funny too, I always hear founders like, I emailed, such and such investor and they haven't replied yet. I'm like, okay, you serious right now? Like, I don't think some founders realize how many emails or contacts you'll get a day. Like, now don't give me an exact number. Can you give me a round part estimate, like how many you get a week or a day that's unsolicited?
It really depends. Like it's all platforms. It comes in different, it could be a call, it could be like emails, obviously with the early stage in different companies and the time of year. So it could be hundreds, it could be some days are just less than that. But in an annual basis, you'd imagine if you're calling and emailing somebody else is all the founders are
Yeah.
doing that.
So someone's going to cold email you. What needs to be in the email so they can catch your eye? Is it a subject line? Is a certain word? Like what catches your eye from a cold email? Like, man, let me look at this.
So there's definitely templates out there. So I like Hustle Fund and some other folks are very open to certain templates. Obviously, hey, I'm working on this. It's aligned in so XYZ vertical. You invest in early stage. I'm currently doing this revenue by XYZ. I've coming from this particular ecosystem. I understand some of your other portfolio companies fit almost the same bill. I'd love to have a conversation, right?
Okay.
So you're trying to lay out what their investment thesis is. But that's always the best way, I think, is for a warm email to work, is that you've actually done the due diligence and like, okay, it's worth taking the call. It sounds like they know what I'm doing. They've researched me. And so this call, the 30 minutes is not going to be a wasted time.
Okay. So here's the next question. And this is like a pet peeve of mine, right? Just personal. So like you hear all the time, like we'll say there's two founders trying to get investment, right? One founder is brand new, but hasn't done anything yet, pretty good idea, has some traction. Other founder has failed 2 times, keeps on losing money, right? It's like investors will invest in the 2-time failed founder than the brand new founder. Why is that? Just because they learned lessons with other people's money, and
Yeah.
like you didn't lose my money. You lost my partner's money, so hopefully you learn some $1 million lessons.
That's usually it.
This thing doesn't pass logic to me, though.
If you fail but someone else's million, I'm sure one, you learn from it just from your own ego, right? But two, along the way, you've kind of really grasped and tested yourself in your resilience. And so I think resilience is why folks tend to invest in folks who've already started something, right? It's kind of like their goal is to de-risk this investment. And so there's multiple ways to de-risk. And one of them is having been a founder and jumping through the hoops. But on the other hand, it really depends on the investor. If I am an operator investor and I understand the founder journey, and I've myself or someone on my team has, won in this particular segment, then it's an easier yes for them that you are like the right product, right fit, versus someone who's I don't know so well.
Shady, can you explain the different what's called like different titles in a venture firm? Like the thing is analyst, junior associate, partner, junior partner, and how that all breaks down.
So that is a very convoluted question. So why I say that, it depends on like the size of the firm. So you'd have to, those titles are used all across, from large firms like Goldman Sachs, all the way down to like smaller firms and accelerators. And so generally, your general partner is the person who's leading the shop. They're going out, they're fundraising themselves to, wealthy investors or institutional banks.
I don't think most people realize that, right? Like the money, investor just get a $1 billion fund, right? They have to go, fundraise just like everyone else, right?
Yeah, they definitely do. I mean, it just depends on the size of the fund and where you are. So if you're a first-time fund, I mean, you are asking, high net worth individuals, 200,000 check here, 500,000 check here. You're asking someone to put in $1 million, someone to put in 2 million. It's the same thing. Oh, well, you haven't proven yourself out, so you're not going to get an investment from like CalSTARS or any of these retirement systems. So you are also, like a founder, is having to prove how you're going to return the same money. And so they are definitely taking meetings, and like founders, just they're trying to get as little meetings as they need as well. So
yes. So talk about your role. Is it called SoGal?
Yeah, SoGal.
So that's a worldwide investment firm, correct?
Correct. So SoGal is a global firm, and it's structured in 2 ways. So there's an investment arm, SoGal Ventures, and so they have their own investment thesis as well. And then SoGal Global Foundation as well is a support. And so that is a global network of diverse investors and entrepreneurs. And that allows the founder and investor community to have conversations that are not necessarily focused on strictly just investing, right? We understand that as diverse candidates, and so when that is said, like SoGal supports, first it started with women, then now it's diverse founders. So that could be, ethnic diversity, LGBTQ, it could be veteran. And so it's the wide, even if you're a male, that fits that category.
So how long has SoGal been around?
So SoGal has been around since approximately like 2015, 2016 time range. It was actually homegrown first with the SoGal community out in California. And so the women, so Pocket Sun and Elizabeth Galbut, who are the managing partners, they first met in California at 500 Startups. And they realized really quickly that women one, weren't being invested in, and they're trying to figure out why. And so as they went to a lot of the investor meetings, they realized like they were the only woman in the room. And at that time, they were also really young, like they were like 25 and 26. And so when you imagine saying at that point, I'm going to start a fund, and you're not only are you a woman and you haven't done the fund yet, but you also are, like millennial, it's like this is not going to happen. But they definitely pulled this off. They're the first millennial investment firm, and so Pocket out of Asia is 30 under 30. Same thing with Elizabeth Galbert here in the States.
So what's your role as an Austin City lead for SoGal? What do you do?
So here we launched last year in 2019. The intent there is to connect local founders, entrepreneurs, and investors one together in the local ecosystem, but also provide them a wider range of opportunity to connect with other chapters across the world. What we know and what most folks know is that if you are in an ecosystem that's not in Silicon Valley or Boston, it's really hard to network and make relationships. But you also know that networking outside of your region, maybe your customer base is in a different region or chapter. So that allows you to land or to start developing relationships that you would, one, normally wouldn't have, but two, that you know that they are diverse friendly as well.
So how has COVID affected the VC industry?
It's definitely changed a lot of things. Like we talked about, people seem to be a lot more approachable. You're not having to physically go to Sand Hill Road to try to woo somebody. I can take a call. I could take more calls in the day. So we see a lot of VCs, actually a lot more activity. And we're definitely encouraging folks to start reaching out now.
I've done like quite a few Zoom pitches in the Bay Area now,
Mhm.
and they all admit, if there's no COVID, we would have made all of you fly in here and pitches in person, right?
Mhm.
So it's like there's a lot more deal flow potentially.
Yeah, and what's really exciting is it's like frictionless, right? So let's just say I'm here in Texas and I want to pitch someone in California and pitch someone in Boston, and then like in Miami, I can literally do that in a day if I wanted to. And before, it's like you're limited by the time constraints. You have to schedule a time probably way in advance so that you can book your tickets. And so it's reduced the friction, which, like I said, for diverse founders, that's probably the most priceless thing at this point in time.
I mean, really, who has money like to fly from Austin to San Francisco, get a hotel room, rent a car, take
Yeah.
3 or 4 days out to run your business? Like,
Yeah.
so next question: when someone's pitching you, like, suppose it is a pitch competition or one-on-one or whatever the case may be, how soon do you decide, like, okay, this is like horrible, this is great, or like, is it 30 seconds, a minute? Like, how soon to pitch do you like get a sense, okay, this might be worth my time, or maybe not worth my time?
It, I'd say it really depends on how the person's deck is set up in the pitch and like how long it is, right? So there's different time lengths depending on like what stage you're pitching and like what the purpose of the pitch itself is. I'd say, if it's a completely like cold one, I mean, you're going to be listening to the pitch and then diving in. Most pitch competitions, they're somewhere between 5 and 10 minutes, and then you have your Q&A. And so the goal there is to really understand if someone's like full of shit. Right? So I think you can generally tell if they're tiptoeing around numbers, if they don't sound very confident about what they've put on the screen themselves. It almost makes you want to question those things. And like the most prepared founder would probably understand more of a deep dive in their business. And if they do, they'll generally showcase that for you.
What's your take on solo founders and co-founders?
When you say that,
Like, are you more apt to invest in a solo founder versus a co-founder? Do you think solo founders are more successful, not successful versus co-founders?
it varies. There's some solo founders that are just very impressive. They know their market. They've had domain experience. They also are like the CEO, right?
Mhm.
If you're a person that you are not the show face and you're not like the one that can raise rounds, it's going to be a little bit harder for you. And so sometimes when that person goes at it alone, like things take a lot longer because they don't have, they might have the product experience, but they don't have like the business experience. So in those cases, you definitely want to see a team built out, especially like, for instance, if you're in healthcare, you always want to make sure that you have the right mix of folks on your team. So it's not just about, hey, I'm going to go get 5 people and let's co-found this, right? Because at that point, then it actually creates a lot more friction because now you're going to need to add in more people and you've already filled your spots just with like placeholders.
Mhm.
So it's really about being, strategic, understanding your strengths, understanding what the industry expects. So if you need a clinical service, a clinical officer, and in order to do regulatory, you'll have to have that person, then it behooves you is to try to find them a little earlier on.
Shady, change the subject. Next, let's talk about Latinx investments and entrepreneurship and your take on that. And how's that going in the world today?
Say that again.
Latinx investments and entrepreneurship.
Yeah. So like you imagine, for all ethnic, we generally are pretty tied hand in hand with each other, right? So when you're thinking like Black and Latinx, we see a lot of momentum, right? So Latinx and VC, we see a lot of the diverse funds, first time fund, emerging fund managers being started now. And if not now, they're actually getting their follow on round from before. So that is very important because it's about time. As a global society, we understand that there is markets across the world that definitely would benefit from having a diverse companies, right? If you think about market capture in LATAM, if you think about in Europe and in Africa, those are huge markets that have been untapped. So that's why when we say that there is power behind the numbers and power behind diversity, that's really what we're talking about, is that we're a global organization. So for you to like keep yourself in like the pattern matched category, like Caucasian male doing
Stanford,
XYZ, like the market.
Daddy's a millionaire.
Yeah. They already, analyze is like the number of unicorns are kind of becoming less, the way that the public markets are shaping up and all these different, investment vehicles. It's definitely changing the investment scene. And so those completely huge outsized returns, you're going to have to start working now at it, right? Like, and finding markets that are untapped.
So, like the example you used for the two SoGal co-founders, two young females, everyone is like probably a middle-aged man, had to match the same with the Latinx founders, right? Or Latinx VCs, probably the same demographics, correct?
Yes. We see a lot of women actually too in the Latinx VC space is kind of coming up. And I think a lot of that, even like for myself as as Puerto Rican woman, is I've always set out to, compete with the guys. I've always I want to show that it's not because I'm not talented enough. It's just because I have never had access to it. If you give me access, like I'll execute. That's always been, I think, for most diverse folks, is you give me access. Once I learn the rules of the game, I can execute. But until then, how am I supposed to showcase that?
So for that, is that the responsibility of we'll say the Caucasian uh, VC fund, to go out and recruit and teach other people to name the game, or is the responsibility of the non-Caucasian people come in and learn the game?
I'd say it's a little bit of both, right? So for the longest time, I think it's been the flip side. It's like diverse founders and fund managers are really trying to gain the experience and credibility to open those doors. But what we see is that it's always been like locked up, right? Like the knowledge and the access.
All the unwritten rules and stuff like that.
Correct. I mean, if you write the rules yourself, like obviously no one can get into whatever world that you've created. And so in this case, we need those champions, and we have a lot of those champions. Like Ben Horowitz is an amazing diverse founder advocate and diverse investor advocate. And so I'd say, like, in the industry, he's one of the big players, is really helping to move a lot of the conversation forward.
So who are some diverse VCs that you look up to, or you look to as mentors?
Let's see. Oh, that's so good. Okay, let's see. So obviously the girls at SoGal, very respected. Arlen Hamilton. So I met her about a year and a half ago.
Yeah, she has a great story.
Great story. Like my upbringing, I don't come from money. Definitely not. And so I've been grinding it out for such a long time. And so I was almost ready to give up in the VC lane, just because I was like, I'm from Texas. I'm from Austin. Like, I'm going to have to move to Silicon Valley to make this happen, because a lot of the opportunities are far and few between. And then obviously we know when I met her, and you can tell that she started this fund, and she's doing amazing things for the founders. She's very founder centric, and also bringing in a lot of diverse investors. It was like a champion, like watching her do that, right? And so for myself, I was like, you know what, like, this is what I set out to do. Like, this is why I even started the journey. And so I'm going to keep at it.
So if you're a founder, what are some warning signs that, okay, this investor is like, maybe not for me, or maybe this investor is like, maybe try to scam me or take advantage of me, or not the right fit for me? Is there some red flags they should be, founders should be looking for?
Yes. So I would say an investor who is just overly aggressive, and really trying, whether it's the terms that they're offering, if you find something in the deal terms that really just is like catches you off guard, you definitely want to be mindful of that. But especially if they're really not in your industry and they just want to be a part of it, it's like, okay, you're going to give me all this money. It's really interesting to see when some investors do that, because they're looking just to take a chunk of the business, right? They're not providing any value add to you. They probably are going to be all up in your business, and they want to be at weekly meetings. And that's the type of investor that you don't want on your cap table.
Like, you want to be my weekly stand up every day? Like, what's no?
Correct. And so that's why it's you need to be able to pick up. You need to also have enough investor meetings as to know what that looks like. And often you can, even ask portfolio companies as a reference. Hey, who's made it, who didn't make it? Like, if you failed, you were invested with them. Hey, why did you fail with this particular investor? Oh, it was us. Our team broke up, or they promised a certain type of support and they didn't give it to me. Like, that's also really good to know, even if it is a more respected firm as well.
So let's go back to your background again and talk about your experience with the U.S. military.
Mm-hmm. Yeah, so my family has been in the military for generations. So obviously, since Puerto Rico, the World War, like, basically my uncle and great uncles were in it, and my family itself. And then so for myself, I was also DoD, like an installation management consultant there. So when we're doing a joint base merger.
That's in Alaska, right?
That was in Alaska. And so we were merging the two bases, the Army and the Air Force base there as well. And so
And then also your military spouse.
Correct. So pretty early on after my undergrad, became military spouse, kind of did those travels. So immediately was straight to Alaska, the most rural place I think that you could be. But it was really exciting because when you, there is a stat that says that most people don't leave, like, I think it's like a 30-mile radius of their house, right? Their whole life. And so it's really interesting because when you go to Alaska, like, we drove there, so it was like 5,000 miles of just pure just
wilderness.
Yeah.
Wilderness, snow, bears.
But they, it's one of the most diverse places actually in America. Most people wouldn't know that. I had did some consultant work for the school district there in the career tech and education, and some future of work initiatives for the state. And just in there, it's the most diverse school district in the nation. So if they speak 66 languages amongst all of the different schools in the high school, and you're talking about like native Eskimo tribes, native Indians, Russian, Laotian, like anything, like Costa Rica. There was everybody there. It was just really impressive to see.
And so you got involved in the tech startup VC things while you were a military spouse?
Yes.
And talk about the challenges of that, because I don't think people realize the challenge of military spouses. Because I think the stats are like military spouses, like 20% unemployed, 40% underemployed.
Mhm.
Most have college degrees, but they got to move every 2 years. So it's a challenge to do anything, right? So how did you work through that?
So for me, it was really hard to find an entrepreneurship ecosystems while I was like moving, right? It really took a lot of effort and work. So for instance, in Alaska itself, the first place was obviously the schools are going to start providing their entrepreneurship ecosystem. And so I was on an advisory board there. And I started seeing the development of like pitch competitions, but they have a very different set of innovation in Alaska, right? So you imagine a lot more practical innovation. Like if I'm driving a truck and you have tracks, snow tires, they snap to your truck and then you can drive across frozen lakes and rivers. Or they have a lot of small planes. So there's a lot of different type of innovation that comes there. And so one of my friends is actually, he had developed a like marine steel grade jet ski that can literally slam into anything and the hull would not bust. It's called a Luma ski. And that was kind of part of the journey where I really realized is like, I know how hard he struggled to find investment. He also had those investors that actually tried to take a lot of the business away from him because he was not, this is first time founder. So that's where I first started saying, you know what, I need to be an advocate for this and also an advocate for folks that are not connected to ecosystems because it was so challenging, one for myself, but also for him. So then from Alaska, we moved to the Raleigh-Durham area. And so there was a different type of tech system, right? The Triangle Research Park. You have a lot of health because of NC State and Chapel Hill and Duke. But you also had a lot of like manufacturing and enterprise tech. So that's literally on that side of the world is when I started running into like DARPA and a lot of the defense innovation because Fort Bragg is on that side as well. So I made it a point for myself is to be involved and engaged with, the accelerators and the investors that are on the East Coast. I traveled up to, to New York and other places just so that I can get a feel of what some of the challenges were, but also like what some of the wins were, right? So there's different setups to move innovation forward in these non-Silicon Valley ecosystems.
So this time, your husband, he's like, what are you doing? Like, are you like playing games? This is a hobby? Like, what are you doing right now? How's that work come about?
It's really interesting because it was not like aware of any of this that was going on, right? So I'm over here at like demo days and like 3D printing and like 3D.
He was like, you're going out partying again?
Like 3D bones. Yeah, because I would drive an hour and a half to be.
You're not to network and partying. What are you doing, right?
Yeah, but he always knows me to be like diving in and engaged. And so that's always the lifestyle. And like, I think that's something also about being like resilient and a military spouse is like, we're pretty independent, right? We don't need a husband there. We can go for long times, engaged in kind of like our own like career field. And so I see that as an added benefit.
So being, military spouse, the DoD experience, how has that helped you or not helped you in your role right now?
So currently here in Austin, and across Texas and a couple of other markets like Las Vegas and San Diego and some other places. Defense Innovation, Army Futures Command, and a lot of those folks have now moved here to Austin. And so that experience and dealing with deep tech like AI, machine learning, really understanding like how a government both acquires technology and also how they implement it. It's been very beneficial, I think, for some of those conversations. We know, obviously, with COVID, like healthcare and a lot of large organizations are going to be like changing their structures. And so that's experience that a lot of people don't have.
So what's your take on this? This is my opinion again. Like, see, like a lot of military spouses are like, oh, woe be me. My husband's deploying. I got to take care of the kids. I want a job, but there's nothing out there for me. So I'll just, stay at home. And there's other, spouses like you, like, make stuff happen, right? Why are some spouses like you make stuff happen? Other spouses like pretty much like, or resign to their fate and don't try to get better?
I say it's always a personality trait. Like I've always been this person. My dad, is from Brooklyn. And so I was raised to be this type of person. Very go-getter. I don't care what you say. Like I'm going to sit at the table, even if you don't want me there. Like I hold my own. And so I'd say that transpired into being able to utilize like those different moves in a certain way. And then the other part is also um, you have to see it to believe it. And so a lot of times you don't know what is available to you or not. When I got to Alaska and to North Carolina, I would be lying to say that I wasn't depressed. It was like getting rejected. It was the same thing going there. No one knows you. Why am I going to hire you? And like no one in the whole freaking state knows who you are. Like they can't vouch for you. Right. And so I would say it took me like 5 months to find a role, not because I wasn't qualified. It's just because I hadn't built those networks. And it's like, well, why did you move? And like, oh, you're a military spouse. Well, that means you're going to leave in 2 years. Like, why do I even want to hire you then? So it's
And
like,
that's a pet peeve for me too. Like, so you were to go with no one in the row, and instead of taking on a potential superstar for 6 months, right, or a year, right?
mhm.
I never understood that logic.
And I don't understand that either. Cause literally like anyone that you would call in my past would say like the solid track record. Like I took on like a 1-year project, like slam dunk. Like they wanted me to fly to these remote regions in Alaska to do work. And I was like, I'm sorry, like I have to leave. Right. And so I think folks don't realize that, one, highly capable, you know, whether you're a woman or a male, right? Because you could be a male spouse too. And two, it's like, hey, you should, because you're going to get someone that comes in. And usually military spouses are very frank, right? Hey, this is not working out. So and so, she is not adding to the game. At some point, she probably needs to get fired. Like, so
Definitely.
you actually have someone with outside eyes come in for a year
And
or
you
two.
think too, like you went to Alaska, someone would thought, okay, Shady did a move her whole household from this place to Alaska, and that's not, this doesn't happen, right? There's a lot of planning, logistics, figuring stuff out. That's not alone should be like okay, let me take a look at what she's doing.
Exactly. I mean, you're handling it all, like finances and, uh, move to move, being a landlord from afar. Like these women are pretty on their game, I'd say.
So next, talk about your role with, I think it's called Lift Fund in San Antonio. What's your role with that? What is that about?
Yeah, so I have been involved with Lyft Fund since I was in San Antonio. So I used to work for the National Association for Latino Community Asset Builders. And, basically it's a long name, but what that means is there are community development finance institutions and microfinance and economic development agencies all across the US. And so what we did is we were an advocate for these different institutions. And when I say that, it's basically like a collaborative. And so anything that was needed, like policy or investment, we would align everyone towards these specific goals, right? And so Lift Fund, you should be Acción Texas, which was a very dynamic organization. And Janie Barrera was on our board of directors. And so that longstanding relationship really led to understand that as a nonprofit, they're able to assist a lot of the founders in different ways than traditional lending can assist. And so for veterans, for women veterans and military and the connected community, that's really important is because you often don't know how to trust folks when you're building out your company because you have never like stepped into that world before. And so currently I work with them to assist in aligning some of those initiatives so that one, they can be and better serve the military community, but as well as other diverse founders as well.
So from your point of view, what are some characteristics of successful founders and characteristics of unsuccessful founders?
So a lot of successful founders are definitely coachable.
I hear that all the time. Yeah.
It's absolutely like if you can like take an advice, kind of filter it out and able to act on it, like you'll be more successful than someone who thinks that they know it all. Because the notion is that you will pivot at least 5 times. That's in your business, in your team, in your needs, and what the market wants, like who the customer is. And so if you're literally like stuck in your way and you won't make it. You have to have like a resilient like mind and mindset to be able to understand that you don't know it all, right?
Yeah. So, and what do most founders get wrong about the fundraising process?
They get wrong about it. That's a hard one. I think that founders sometimes tend to be so in love with their product that they don't realize like that there's competition, and they think that it's going to come easy or that the money is free flowing. They might see other people, get funding and just be like, oh, this is going to be really easy. And then it's really not. It is strategic. The other part I also see is they also think that they need this money in order to make their company work, which is also not true and not a good representation. Some folks can get away with actually bolstering up their team, their sales team, maybe doing contract sales to get the revenue flowing instead of actually having the investment. And so that way they actually get more traction and they figure some things out. They actually get a bigger slice of the pie. That's why I particularly enjoy a lot of military connected community founders is because they will actually have a lot more revenue. They'll be a lot further along in their company before they actually go out and raise. And so at that point, they're looking to raise because they actually like need it versus just like want it. And so we always say that sales is the best type of like traction and funding.
Yes. So next, on June 18, 2020, you were, I believe, awarded a scholarship from the 100 Women in Finance and the CII Association.
Mm-hmm.
Can you talk about that?
Yeah, so that's really exciting. So 100 Women in Finance is a global organization of investors and
So pretty big deal, right?
It's a great organization. Their mission there is to actually promote women at all different stages. So CAIA is the Association for Chartered Analysts for Alternative Investments. So alternative investments is the asset classes of real estate, like private equity, like venture capital and hedge funds. And so those are often the most unrepresented as well in the investment ecosystem. So they selected 20 women globally to be a part of the program. And
do you know how many people like applied or like nominated for it?
I don't know how many people were nominated or applied, but what they see in the candidate is someone that will be able to change the industry, but also wasn't privy before to access to that particular industry. So it's a lot of like developing the person, right? So when I dive into all of the alternative investments, like VC is an asset class, and since I have like real estate and property, I understand real estate and property, but like hedge funds and like I don't even know like half of what some of that stuff is. But a lot of times you need to be thrown in and have that support in order for you to grow into a person that a firm might need. And so for me, this is just an extremely perfect opportunity to be surrounded by so many like powerful women, especially all across the world. Like I'm enjoying it.
So back in 2019, you were part of an organizing committee for something called the Latinx Summit.
Yeah.
Now, was that done in 2022 or was it canceled because of COVID?
For 2022, they actually they did it virtual.
Okay.
So they actually grew it. So we had did it in person. It was with a LULAC, which is a long stay Latino advocacy and civil rights group. And so they had did it small, and then this year they hosted a pitch competition to go along with it. So
And last year, this was San Antonio this is done at, or?
yeah, so last year, well, one was in San Antonio, and then one was in Austin, and this year it was supposed to be on site in DC. So they generally have very renowned folks like from the SBA and vice president shows up. But this year
So it's just like
took a
a
different
summit,
tune.
people pitch and like just a basic tech summit.
No, in this case it's a little bit different.
Okay.
It's a little bit more focused on first time founder and progression of that particular founder. So the goal there is to, well, like we said, is if you can see it, you can believe it, right?
Mhm.
So it's give a platform to outstanding Latinos who have built companies, investment firms, on the panels and everything. And so folks can see, oh my gosh, like in one generation, she was able to do that. Like, okay, I shouldn't be limiting to myself to, smaller goals.
So what's some of your personal goals moving forward? Like, do you want to start your own VC firm? Do you want to be, general partner at, Sequoia Capital? Like, what's your personal goals and professional goals moving forward?
Those are interesting. So originally I had set out to work for a larger firm. Um, I quickly realized that not in the pattern match for that, right? So when I say that, a lot of VCs, a lot of folks were pulled, in their undergrad, right out of undergrad to be like an analyst or an associate. And then you kind of move through the ranks, and then you go to like Morgan Stanley and you become like an associate first for however many years, and then you come back and then you do your MBA. And so I came in at this like at all different angles, right? So I came in and I did my master's, and I had some of the other pattern match things. Like I had never been at Morgan Stanley for an extensive amount of time. So for me, that's why I said when seeing Arlen, like I really was like, this particular like starting a firm is something that I'm going to do. And so recently I was at Stanford and 500 startups in an invite only cohort centered around diverse founders and creating new funds. So I've started in that path, but obviously, as you know, is that you have to raise your fund yourself. And so that does take some time. So there's a 2 to 3 year mark that I've set particularly for that. So in the meantime, I will be looking for like a larger firm to work
So
for.
what makes someone a successful investor? Is like, have to have like so many home runs, so many doubles, like 10% success rate. Is there a metric out there that says, okay, this investor is actually a successful investor?
First and foremost, I'd say whatever you've laid out in your fund and like the return that you're going to give to your LPs, like that's always the best metric for that. You've outlined what you think that you're capable of in this market, because different industries have different returns, and different markets. So obviously the big firms like Sequoia and some of the others, they get so much of the best deal flow, right? And so those metrics for VCs, like like change, whether it's, industries like 3x, 5x, it really just depends. And so I think it's hard to say like what makes the best investor.
So of course, the Bay Area, Austin, Seattle, Boston, New York, like known as like the VC hubs, right?
Hmm.
You're a founder in, I don't know, um, Memphis, Tennessee.
Memphis, I love barbecue there.
Yeah,
That's
like
great.
I'm sure there's investors there, and angels and stuff. But how do you like? What do you do? Like, I mean, you can't fly to the Bay Area every week to pitch people. Like, how do
Hmm.
you even get started?
So generally, like your local ecosystem will have players who have stepped out or founders in the region. So I always like to look at things like a region. Like so for Texas, like we're in the mighty middle, right? That's a term you can look it up, uh, and it's everything from like Texas to Illinois and down this whole particular area. And so the reason sometimes that they lay those out is because a lot of the same challenges in that particular region. So the Midwest is going to be the same. You would want to reach out to those particular folks and understand kind of like some of their networks. And that way they can like generally, like for instance, like say you are in Memphis, it's probably a lot of like the earlier stage. So you'll have your early stage rounds. They're really great in doing that. And then after you get to a certain round, there generally is a fund or some type of network that might syndicate um, and like be able to access like a fund on some of the coast in order to progress you through the different rounds. So as you get bigger checks, generally the coast have more of the big checks.
Mm.
And so then you'll have to kind of align yourselves with that.
So Shady, obviously you're on the grind. You're doing big things. You're a superstar. You're involved with a whole lot of things. What
Thanks.
what do you do for fun?
Oh, I do everything. Oh man, I do it all. Hike, snowboard, um, work on cars. Like, I don't know. I just play football. I don't know.
So kind of like a tomboy.
I'm a different type of girl. Yeah. Watch sports. Yeah, I like to be I like culture a lot. So you'll see that I've traveled like to Shanghai and Tokyo. And when we're not in COVID, I probably would have been taking like every 6 months. I actually like to try to go to a different ecosystem because I feel like learning the local environment is a little bit better than than just visiting for a week or so.
No, you're pretty busy, like a lot of people are. Like, how do you do your schedule? Like, do you wake up one day and just wing it? Do you have a plan? Like, how do you prioritize all the things that you got going on? How do you do that?
You know, I'm actually a big winger and it's not good. Generally I'd like to, you map out like everyone else does is like their weeks. Also blocking time off on the schedule, so that you have your personal like downtime. And so for me, that fluctuates. I try to like block that off in advance. So if it's like every Friday, I just don't book anything in the mornings from a certain time in case I need to um like have some me time, then I do that. Um, and so a lot of like tech implementations is really important.
And speaking of wellness, how do you take care of yourself to make sure you don't get burned out and
I have a good, so that's something about me is I'm pretty like down to earth and like no BS. And so I surround myself with folks that are the same. I try to have individuals that I can relate to from a more of my background perspective, right? So obviously growing up and having like a lot of challenges and having to work through things, I still have friends like all across the US. Like I'll call them and they might be higher places than me. I'm like, hey man, like what's up, like how's it going, like kind of just kind of going back to my roots because most people that are diverse, that I know have also been on the grind for a while. And so it's refreshing to kind of just be normal for once. And so that's what I generally like to do.
so like I say, you've done a lot of traveling. What's been your favorite place so far?
Oh, my favorite place. Mm. I actually really enjoyed Shanghai. So when you think about China, you have so many preconceived ideas about what China is. And when you get there and then you picture New York and then you picture it like 7 times better than New York. And, folks are driving around with their like Maseratis and stuff and like parking at like a dive bar and then they don't care if it gets dinged and stuff. So it was just really impressive to see, they have both their cultural and then like, huge skyscrapers, and they may have built this whole entire area in like 2 years and all these skyscrapers. And I'm like, man, we can't even get like 35 built. Like, what's going on? You have bullet trains, they all underground, like the way that they can move people. And it's just really impressive for me to have seen, not having been to Asia before. And so I was there for a week, and I don't know, it was really interesting just to know that, like in the US, we have a lot of freedom, but also there's a lot of advanced tech in other places across the world.
What's the most random place you've been to? Like, you've been to this place, people like, you went where? Like, why would you even go here? Like, are you kidding me, right? Why you pick this place to go to?
So I went to a place, I didn't necessarily pick it. So I had flown to Spain, and we were on the west side of Spain. And so we just started driving, and then we ended up at these like border gates. I'm like, where are we? Like, we didn't even know. And we were literally at the Gibraltar, like the Rock of
Okay.
Gibraltar, right? And so we're like, what? So we like show our passports because we already had them. And we go in, and, I had never really even thought about going to Gibraltar. And so it's actually run by the British. So it's under British rule. So like fish and chips, and everyone's speaking English, like proper English. And we'd literally just been in Spain, and then everyone's speaking Spanish. And so it was just the weirdest thing. And so we got there pretty late at night because, like I said, we were just wandering. And so we get to the Rock of Gibraltar. It's supposed to be closed, but then when we get there, the gate opens. And so we literally could go up there. And so we were able to see like Africa. We could see all of those different regions like lit up at night. And so that was the most random and kind of pretty cool place to go to.
So next, talk about the tech startup scene in Texas. Can you break down San Antonio, Austin, Dallas, and Houston?
Mm-hmm. So Texas, if you don't know, the whole ecosystem is it's like the 10th largest economy, right? And so what we see there is different parts of Texas offer different things. So Houston has a lot of our Fortune, 500s, 100s there, and they have an amazing like healthcare tech scene. And then you obviously have oil and gas and energy centered in that area. And then Dallas has a lot of like corporate agencies and customers and money in itself. And so Dallas is pretty progressive as well. In San Antonio, like CPG, and a lot of like your cybersecurity companies are definitely coming out of that region. And then Austin is almost like the tie-in here because we have, University of Texas at Austin, as well as like St. Edward's and some other institutions. And so they've actively been working at the ecosystem for the last 20 years. So when people see Austin growing, it's not that it just happened to grow. It's like they've been very deliberate. Like with like Michael Dell, obviously was a UT grad, and they stayed in the region building their companies. And so, with like what Silicon Valley experience is, that's what we're trying to do in Texas, is actually connect all of the regions. And what folks don't know is that you can actually drive to a lot of these ecosystems within, 1 hour, 2 hours, or 3 hours, right? So in 2 hours, I can get to Houston, hour to San Antonio, and get to Dallas as well.
But Austin is definitely the lead, so to speak, in the state of Texas.
Yeah, I'd say Austin is like the champion for the region, right? So right now, a lot of the players here are really driving this access to different cities and trying to connect us all so that we can have that same like access to resources and access to founders as some of the other regions have already.
Yeah. And people not from Texas or this area, I don't think they realize how many colleges are here in Austin, San Antonio, like UT Austin, Baylor, in
Mhm.
San Antonio, UTSA, Trinity, Texas A&M around the road, there's so many, Texas State, so many colleges and talent in this area. I don't think people realize the talent here.
No, they definitely don't, but they're picking up. When you're having a young talent, um, and they need an ecosystem that they can actually grow into, find relationships, get married. Like Austin is very friendly, in that sense, and it's also driving like the amount of people that move here. I think when I moved here about 5 years ago, we were getting like 100 people a day moving here. Now it's like probably like 200, 250. I don't know. I see just everyone coming here. And so that's nice. I mean, we have like Oracle, Google's building a second tower, we have Facebook. And so that momentum is really driving a lot of the change, here. And then we also see that, for instance, like between Houston and Dallas, they're considering a bullet train. I think it might have been approved already. But then you also see like, Tesla's coming here.
Mhm. Joe Rogan came here.
Yeah. Yeah, we have a lot of folks that actually come through. We're a big presence too, like in the presidential sphere. So they come here for
So next,
South
talk
by
about your role with
Southwest.
the thing is called Giddy Inc.
Yeah. So Giddy Inc. Is a platform that works with portfolio companies. So, for instance, if a company has already been invested in, they need to build out their team, and so they're looking for extreme like culture fit, productivity, and so we work with those portfolio companies to help them map out and build a particular team. That also might look like if an exec, like from Twitter, is leaving their company and wants to start a new company, then they would come to Giddy and assist in like tech dev is like the specialty there is finding the dev talent. So if you're looking for someone who graduated from the top school in India, they came and worked at a top agency in the US. They have this particular culture. You're needing someone that maybe has a background like from Snapchat, but also has other skill sets. It's being really mindful because at that point in time, the investor has put money in, and then now you're needing to like grow and grow fast. And so that's one of the custom type services that we do. The other is also connecting just startups in themselves is finding dev talent of extremely high quality that's not in the US as well.
Can you talk about how hard it is? Like, for example, for me, I'm in Seattle, I have a startup. And people say, oh, all the software developers up there, easy to find. Like, well, actually, it's not because Amazon pays them $10 million a year, Microsoft,
Mm-hmm.
and you have people in the code academies, like really don't know much about tech, right? They're just like, kindergarten level. Can you talk about the challenges of like finding software developers for your tech company?
Mm-hmm. Yep. It's one of the hardest things I think out there. Most people would tell you that there is no science to it. But what is really important is to know what you need and like how you're going to get there. Like don't cut corners, with your tech dev. And so like your stacks, if it's a CTO that you need and someone with the lifeblood and the culture understanding that's going to grow with you, it's really important to identify that earlier on, before you start spending like a ton of money on your dev, right? Because this person's going to need to be a good culture fit, and you don't want to waste a lot of money before you define that. But also, like you can get quality dev outside of your particular region, right? If you outsource it.
Yes. So for VCs, is it like some kind of certification test you got to take to be a VC? Do you have to have some amount of money? So some kind of ethical test you got to do or standards you got to follow? Or does anyone can say, I raised a $10 million fund, I'm a VC now? How does that work?
Well, but folks don't just like raise, right? Because you generally, in order to raise, you'd have to have some type of like credibility, I guess, if you had 10 million of your own, but yeah, there are standards. And so like the way that you progress and the skill sets that you learn at different firms, you're building out like your team. Um, but you have like VCs that are from different backgrounds, right? So they could be operators, they could be just first time fund managers, they can be investment bankers that turned VCs. And that's because they're able to raise that particular fund itself. But like the SEC really guides like all of the limited partners and like the way that they can invest and like how those relationships need to be established in advance. So there are a lot of like a back end rules. You just can't start like giving money, even as an angel investor, right? So there's ways that you can invest, like crowdfunding. If you haven't been, there's certain assets that you need to have. And so those guidelines are pretty much set in stone by SEC. And then so even like as you progress in angel investing in VC, you'd want to know what those are.
So let's talk about angel investing a little bit. What's the difference between that and VCs? Angel investors are more like real early. They get smaller checks, right?
Actually, I wouldn't determine it by check size. I would just determine it by the capability of that particular angel. And generally, you see that they might be smaller check size than VCs because VCs like to write like bigger checks for a smaller portfolio. Angels, they call them that because it's their money, right? They call the shots on how they want to give it and how they want to invest. So maybe they like you, maybe they want to give you $1 million, maybe they want to give you 100,000, 50, whatever that relationship is. The only person that they have to report to is themselves and their checkbook, right? And so it's like if you go to Silicon Valley, like the check size might be bigger. It might be someone that is a Googler, and so when they invest, they're going to invest big. And then you could be just a high net worth individual and you've set that you want to give out like smaller checks. So that's the angel. And then VC, it's like you are a actual like fund and your shareholders are your limited partners. So you've already set in stone in advance of raising this money, like you're going to return this money. So if you think about like your 401k or whatever it might be, like the goal is to return that money to them first, and then you get your allotment after that. So that's the difference. So now you have to say no more often because you're tied to like rules and regulations.
So next, this is like a several part question. Talk about how valuations and how that works. An example, and go into like, I think in the Bay Area, you might get a company evaluated at 10 million. That same company would evaluate at maybe 7 million in Austin, maybe 6 in New York City. How does that all work and play?
So generally, valuations, it just really depends on the ecosystem, right? And the risk aversion there. So anything outside of the coast is going to be a little bit more risk adverse. They're going to want to have you more traction. They're going to not want to like have the valuation like really exceed, because obviously when you go for the next round of funding, you don't want a down round, which basically means, that you haven't like kind of met the original metrics, right? When you're thinking about like the Bay itself, they have generally have a lot of unicorns, right? And so they also have the capability of growing companies potentially a lot faster. And so they're a little bit more loose, kind of, I think, with the valuations. But also, when you think about like statistics in general, like people who have extremely high growth companies are all flocking there. So it looks like they're giving money away like left and right. It's just that it has been the long stay for so long, is like they have so many unicorns. It's because the deal flow is going there, right? At top of mind, if you have the next Google or Facebook, your immediate mind is to go to the Bay and find somebody there. And so with that in mind, is like they also want outsized returns, right? They're competing amongst their guy, like all the folks there. So they're trying to put money out and to grow you faster. And so that's why you see the differences. Here, you like in the Midwest and other places, or Southwest, you'll have maybe like executives or high net worth individuals that are not really looking to kind of freely throw money around.
Shady, talk about the importance of founders really knowing in depth the details of the cap table. How important is control the cap table?
I think it's like you should definitely keep tabs if you don't know like cap table and how that's going to impact you in the future. Like slicing the pie, like early on, you can kind of see how you're going to be diluted. Also know what your investment roadmap looks like. Investors really don't want you to mess up your cap table too much. And what that means is like whatever investor invests now, like the next investor is going to have to deal with them or whatever it is in the later rounds as you move forward. And so you really want to understand what that looks like for you. Some founders are like, hey, everybody like gets the same percentage. Everyone's gonna get 30%. We got 3 founders or whatnot. But you have to be mindful, like if you have a high growth company, is like you're gonna need to set, like your employee stock options and know that, okay, if I'm gonna get an amazing CEO to come in to take my spot, once I'm not able to grow this company more, I'm gonna need to offer him a certain amount of shares. So it's really important. I think early on is to really understand those dynamics.
Like map everything out like 5-10 years down the road.
Yeah. I mean, or at least 5 years, 3 to 5 years, is because your company's going to change a lot. But if you understand it, you won't necessarily make a lot of the mistakes. You don't need to understand everything. You just need to understand where people have like royally screwed up and like try not to step into those lanes.
So I think there's and correct me if I'm wrong, those convertible notes, safes, and just regular equity.
Mm-hmm.
Do you have a preference for those three? You kind of like do a quick explanation of each one.
Yeah. So so convertible notes has generally been the standard. So convertible note is basically, I don't know what your valuation is at the current time. We both don't know. We know that it's going to grow. We don't know how much. So at this point in time, we're going to set that we're investing this amount and like the cap, right? So you're having the cap that's there. And so when it does come to fruition on the next round, like that's where you'll get like your evaluation. So that's generally been safe for the investor and the founder, and without having to give an early evaluation, because you'll probably pivot and do a lot of changes. And it kind of helps, like that particular stage. The safe was, recently been instituted. That's definitely founder friendly, just because it's a little bit more open ended. But sometimes that has been like misutilized by founders, and so there are some investors that have gotten screwed over, right? And so folks are starting to kind of like step back away from the safe, back into like the convertible note, and that really, like I said, just depends on the different what you call it, on the ecosystem and maybe the lane that you're in as far as your vertical or market.
So tell me, I'm being paranoid, right? So suppose a convertible note. Suppose you invest in my company and you give me $100,000, right?
Mm-hmm.
But let's suppose my company doesn't do good and I can't raise another round. That turns into debt and I have to pay you $100,000, right? I know everyone says that never happens, but does it ever happen where it converts to debt and the founder has to pay the money back?
I just say whatever term, folks set up their terms very differently, especially with the notes, like with the convertible note size. So that's just kind of an individual, I think, one-on-one basis on how that would work. Obviously, like VCs, when they're mapping out their portfolios, like they are already understanding that nearly 2/3 of their all the portfolios will like go to zero, and then so they only have like a third that's going to have outsized returns, right? So these companies that they pick need to be able to return all of the failed money as well.
Okay.
So that's why they're so particular when they are investing. And then for founders themselves, it's really important to know what, like in the life cycle too, of of the fund, right? So generally when they get the money, they're trying to deploy it within the first 3 years or so. And so if you miss the mark, or if you're at the tail end of their fund and they haven't necessarily found the one, that's a reason that they could be saying no too, is like they've already kind of taken their bets and they're really trying to round out what the returns might look like.
Yeah, this is like a risk you take as a founder doing convertible note. Like you don't raise a fund and you owe this invest $100,000. Are they gonna say, no, I want my money now? I
Yeah.
hear it never happens, but it's just like,
I don't know.
okay.
Yeah, I can't speak for most. And like I said, I guess it depends on the type of investor that you are setting this up with, and then like the individual arrangements that they might be.
So don't give any names, any details, but there's a company out there you're talking to right now that you're really excited about.
Yeah, yeah. Yeah, they're amazing founder, very coachable, right? And so you can tell by the energy kind of in the field and kind of what the traction has been in such a short amount of time. Is like this person's going to like knock it out of the park. And so that's very interesting to see at different levels. So for me, I like being early stage and seeing later shades. I've also seen like pre-patent work finally get their patent and they're moving on. And so, but this is just like different type of energy that you can see.
So from the time a founder first contacts you, how many touches or how long does it take for you to like decide, okay, I'm gonna invest in this person? I know it depends, but on general, like, is it like 6 months later, 10 meetings later,
It's very different. Like I've seen different companies, like different firms, or just they have a different threshold, I think, for the way that they invest and like the way that they take deal flow, right? So like we were talking about earlier, if they are a firm that has like they've been there for a while, like they're going to see they have a playbook likely. Okay, they meet these parameters. This is what they need. Okay, this is pretty solid investment. And maybe everything's laid out. Like we both know like what the check size will be when you come to me. And so those can kind of be like just maybe a 2, whatever meeting turnaround. But it really depends. Like if I've known you forever and I know like that your work ethic and it's going to be very different. Right. So it's hard to say like from one meeting, there's no standard.
So a lot of time, founders, they'll go pitch an investor, have a good meeting. And oftentimes the investor will say, well, we like what you're doing, blase, great pitch, on and on. However, we can't pitch it. You don't have enough traction.
Mm-hmm.
So when they say that, is that, should the founders take that as that, no, they're really interested. We just got to get more traction and get more customers? Or is that really code for no? We're not going to invest in you.
If you don't meet the thesis, obviously, like they'll likely say it's a solid no, right? If you have the capability of being in that space and at the current time you don't fit it, then it could be the traction, it could be something else. And so that is a way to either encourage you, like you might be really close but you need a certain thing, or just to kind of keep you in the orb, right? They want to see that you're doing the updates. So don't take it as a complete like negative. Just come back and and you're going to be moving in like the update like section now.
Yeah, I think founders have to keep in mind. I think you hear like 300 no's before you get a yes, or some high number like that. You're gonna have to go through a lot of no's, right?
Yeah. And I mean, like traction, yeah, there's a lot of no's. There could be a lot like, hey, maybe you came in too late, right? Let's say
the fund's already been done.
Fund's already been done, but I know I'm raising another fund. So then you're kind of in that cycle. And obviously I'm going to start pre-planning who I would accept into the new fund. So that's a chance, right? Don't completely, I see folks like bashing, oh man, he just told me like, I'm not investable right now. And they take it so hard. Mm-hmm. And it's just like, hey, just play the game. And the game at the moment is like, you currently don't fit. You're obviously not going to change their mind right now. The only way you'll change their mind is if you send these updates, tell them about your traction, and then like keep moving on. Try to get debriefed, but often most VCs won't give you a debrief just because they want you like to figure it out, or they honestly might not be the domain expert and they don't really know like which lever in your whole entire business model that you need to switch up. They just know that you need to have a certain metric. So a good question to be like, okay, like what would you need to see in order for this to look appealing to you? And so if they can answer something in that realm, like that's helpful. Like I'd like to see more users. I'd like to see your users paying a higher volume. Kind of helps get some direction.
So from your point of view, how much responsibility should VCs have on educating founders and how the quote unquote game works?
Being me, I like the idea of educating like founders, right? People are not going to know necessarily how to pitch perfect the first time. They're not going to know funding cycles, check sizes. I really think that people should be moving towards educating the particular founder that comes through the door, because it's either for their own benefit or for another like firm's benefit. But like we've always seen, like part of the game is understanding what to do and what not to do, right? And so how can I present my best self if I don't even know what you're looking for, right? And so that's why a lot of VCs like the warm introduction. They like to know that you know someone that kind of knows how we operate. But with a lot of research, like Crunchbase and PitchBook, press releases, and following some of your competitors, you can kind of get an idea. Like, okay, they got 1 million at this valuation, and they had so many customers, etc. So that way, like the type of information that they like to be presented. So I guess the catch-22, it's like you want the founder to also be engaged as well, right? Like I don't want a founder sending 1,000 emails, just like blank market it and not really give a shit, right? And so I think it's a reciprocated.
Can you talk about the points of founders like putting themselves out there, so to say, like going to pitch competitions, networking, meeting people, and all that, personal brand, all that kind of stuff?
Yeah, I mean, like I said earlier, if you are not that CEO that can get on stage, that can sell your company, and you're not that person, like you're gonna need to either become that person pretty fast, because like that's your whole brand, right? How are you gonna get customers if you can't sell the VC, if you can't pitch? So it's really important is to just kind of put yourself out there. Like a lot of folks like, oh, someone's going to steal my idea. Like, honestly, if your idea is that easily like stealable, then maybe you should be rethinking it. But folks, the faster that you're able to kind of put yourself out there, the more feedback that you're going to get, right? What you see is a lot of folks building in their garage, they're like 6 months, heads in the ground, doing something. And by the time they come to the market, it's like, nah, like we really wanted something completely different.
So, most founders are told, keep on grinding, don't give up, hustle, 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 push on, get over all the obstacles, never give up. But when should a founder give up? Like, when should a founder say, you know what? I mean, I'm not even talking about pivot, like just give up. Like, okay, like this is not working for me. When should a founder say, okay, this is like not working for me?
That's a hard one. We've seen a lot of failures. So the thing about like our region is folks really talk about it. Oftentimes we've seen, okay, someone got a really large funding round, and I'm very like new. I only have a couple of founders in this space. Like my competitive advantage isn't that great. Am I going to be able to catch up to that like funding round? Right. So at that point, you need to consider like, hey, can I get acquired? Can it build up a customer base that they'd want instead of like having to build it themselves? They could just acquire me. So that's an option. And then like basically if you're just going to quit, it's literally on you, right? Like, are you able as a person, your family responsibilities, etc., like to continue to drive? So like I said, it's competition and personal like perseverance in this particular space. Some of your advisors, might be able to tell you, hey, like this landscape is becoming really competitive. For instance, like if you're working on like a telehealth, right? You literally just saw that whole entire market like flipped overnight, and like Q1 of this year, so many investments went into like mental health, telehealth, like etc. You have to take like a step back now and be like, okay, am I at the right time and right place for this? Do I need to put it aside and then wait for the right timing to be available? Because at the end of the day, like you're burning money the more that you continue to pursue it. And so that's why most people, like they fail. It's either because the team didn't work out or the money ran out.
I was listening to a podcast a while ago. It was about a company. This is a long time ago. They were making a calendar, right? They're going to charge money for a calendar. And then 6 months later, Google came out with a free calendar, right?
Yeah.
So like, kind of like crushed them, right?
That happens too. It's really interesting. So being in Austin, we have South by Southwest. So we know we bring like 100,000 innovators a year. And, people have great successes like Twitter, like folks launching here. And then the next year they become exponentially larger. But we also see like these topics, right? So for instance, like if it's a blockchain, if it's whatever it might be, and like the following year, we'll see so many startups in that same space. It's because they like, there's some like, thought knowledge like going around, and like they'll create this and they think that they have like the winning like business to combat the whatever challenge it is or the market. And then they realize like, oh my gosh, there's like 10 other people doing the same exact thing, right? And so that's like some of the like founder resiliency and knowing what you're doing.
Are you going to execute better? You're going to recruit a better team?
Correct. Yeah. So I always like, founders to stay aware. Like if you come in and say you don't have a competitor, then like you're totally full of shit, because like there's always a competitor, right? Even if it's a corporate too, like Google or Amazon, if they're working on something in your lane, you need to be really mindful of like where they're at with it, because if it comes out, then.
So with South by Southwest, is the hype real? Is that really that great an event?
Oh, South by Southwest is amazing. Yeah. It really depends. Like, so there's different reasons. We have film, we have music, but most people talk about South by Southwest because it's like an innovation track there. And so you have all the folks from across the world. So there's a particular conference section there, and you'll have like Tokyo and Africa and all of the top like countries across the world. They'll bring some of their top founders from their ecosystems to come and like display the tech and network. And so I know even like last year, like from London, like we were just hanging out for lunch. And so it was really interesting is that you can kind of run and meet so many folks. And then obviously like South by Southwest pitch competitions, those have always produced some good like winners.
Yeah, I gotta imagine you gotta be top notch even to be accepted, even compete in those things.
Yeah, and and there's like particular, and it doesn't have to be just. It's all different types of tech. So we have like ed tech. You could be doing like health. So last year, like Dr. Everlyn from UT, she developed the mass spec pen, which basically like when you're in surgery, you could put the pen against the tissue, and you can tell with a certain degree of accuracy whether that tissue is cancerous, right? So before you'd have to remove a huge section without knowing, but like live in surgery, like you can test the tissue, which is a great innovation, right? And so they just recently started a company. And so I think that was about 2 years ago where they were at South by Southwest. Now it's a full-fledged company and they're growing. So you see a lot of different types of innovation.
So you're from San Antonio, but currently live in Austin, Texas, correct?
Yes.
So someone is going to come visit San Antonio, never been there before. What's the one thing they need to go see in San Antonio or do in San Antonio?
One thing they need to see?
Or do. Man. Never been there before. What's the one thing they have to see or do?
Oh, that's a hard one. San Antonio is like a huge small town. So
it is, actually. It is, yeah.
Because it's so like the culture there is really dynamic. I would say, everyone says it. So like the Riverwalk. but like on a culturally appropriate holiday. So if you tie it against like Christmas or like a Spanish cultural event. So like we obviously have like Fiesta or Dia de los Muertos. Like it's a chance to see like the city at its cultural best with like folklorical dances and all of the great things that come with San Antonio having been like under Mexican rule for so long, right? Before even the United States even set the boundaries there. So.
And then the same question for Austin.
Oh, Austin. Oh, what do you got to do? Okay. Mm-hmm. Austin's awesome. I'd like to just go kayak on the lake, pretty much Barton Springs, and just kind of really enjoy like city life, but also on the water. So that's what I would do when you come here. And then obviously like good drinks. And so we have a lot of like speakeasies or bars that have codes. So you have to kind of get this code in advance, and it's a very limited like room. Those are always fun to go to.
So do you have a favorite barbecue place?
Yes, love barbecue. My favorite. So the pit masters at Franklin's, one of their understudies went and started their own on the east side.
And that's in Austin?
That's in Austin, yep.
And your favorite place for Mexican food?
Favorite place for Mexican food? I really like churros downtown.
In San Antonio? Or in Austin?
In Austin.
Okay.
In San Antonio, you definitely want to go to Mi Tierra. It is downtown. It is the like longest stay Mexican, most traditional restaurant. They'll have the mariachis. They'll have the tres leches cake and everything.
So next, let's talk about Bunker Labs and your role with them. You're a CLO out of Austin for Bunker Labs. I think you've been there, you're going on 2 years now. Talk about your role with them.
Yeah, so our role here is to work with our military connected community entrepreneurs, everything from idea stage to those that have, raised $1 million or they're doing 500K ARR. And you're really connecting them to your ecosystem. So in this particular case, it's like how to progress and grow these entrepreneurs that don't necessarily have a connected network, right? So someone lands in Austin. We have a couple of different programs. So like I said, idea stage, if you're just transitioning, what to do, what not to do. There's a veterans and residents program. It's a biannual incubator accelerator itself. And that allows the founders to, one, develop themselves as CEOs, help them find, co-founders, and then meet the next milestone. And so those milestones could be the investment round. It could be like the traction. And then we also have a program to connect founders who actually already have like received funding or have the traction with executives like Howard Schultz from Starbucks or from Dell, is to now how do I become an actual full-fledged organization and like what that structure looks like. So if it's IT structure, etc.
And you've been with them for like 2 years, I think?
2 years, yeah.
So how to put this? So what's the success metrics for Bunker Labs from your point of view? Is it like you have the 8 companies in VIR and 6 raise money? Or is it 6 of them learn, wow, this is next for us? Or is the success metric different for each company from your point of view?
Each company has a different, so we're industry agnostic. So that basically means any type of company, any vertical can come in. There, it's actually moving them against the milestones that they have set out for themselves. And it's moving the tick mark for those entrepreneurs, especially if it requires connecting to different ecosystems. So we have a national presence. And so if somebody needs to be connected like to Ohio or to New York, and they're in their distribution channels, and we would assist them in progressing in that manner. So we don't like take equity or anything like that. And so like it's mainly to get these military entrepreneurs to progress in their ecosystem. We know that like large companies like Nike and UPS, et cetera, were built by military entrepreneurs. And so it is a way to build like long stay economic, progression.
And one thing I don't think a lot of people realize in the military, we're all on a little bubbles, right? Fort Lewis bubble, Fort Hood bubble. So you might be a Fort Hood, but odds you coming down to Austin and network, with tech people, probably slim to none, right? So I think Bunker Levels does a good job of, exposing people to those different networks, right?
Yeah. So like for instance, let's say somebody lands, and what we see, like folks have varied interests, but like there's our city leads know all the investors, they know other founders and entrepreneurs, they know all the accelerators. So it's easily able to roadmap, hey, you're going to go to this accelerator next, you're going to go talk to this investor. And the founder themselves probably would have been waiting 6 months or so to figure it out on himself. And by that time, the company could close down. So oftentimes it's the difference between like going further or
So
not.
Shady, is there something that I should have asked you that it didn't?
Oh, there's lots of things. We had discussed this before. So I'm like obviously pretty like down to earth. And so, you mentioned like I'm from San Antonio, and it's really important to know that like that's really where the journey started, right? My dad was trying to bring an innovation to market like when I was 10 years old, and we didn't have access to any of that. And so it literally wasn't patented for like I think 15 years, 10 years or so. And, looking back, it was almost like if that opportunity would have been there, if there would have been a connected network, then he could have moved something along, right? And so growing up in that particular area and seeing like Graham Weston, who's a super advocate here in San Antonio, building out rack space literally like on my old side of town, it was really interesting to see how like VC and investment and directed um, opportunities to different networks can really advance an ecosystem. So then like that was over 12 years ago. So San Antonio was starting to get a small tech innovation ecosystem. And so I would like challenge and like other folks to understand that if your particular market doesn't have an ecosystem, that you can be that person like moving it forward.
Shady, how is it important to you to be like a role model or mentor to other people moving forward?
I think that's always been my goal, is if I can make it and I can show people how to get there, like every time I break down a door, like I literally open up resources to like folks that follow me. So for me, I think it's a really high priority is to make it, especially in the VC lane, and so then you can bring all of those resources back to the particular community.
Shady, can you tell people how to reach out to you?
Yeah. So obviously you can reach out to me on LinkedIn. So it's Shaydi DeJesus, Slim Shady. No, it's Shaydi DeJesus. And then also on Twitter, it's just at Shaydi DeJesus as well.
And we have the links to your social media on our show notes, and the show notes at www.cavnesshlblog.com. So let's talk about your Slim Shady nickname.
What's up?
How'd that come about? Is someone gave it to you? You gave it to yourself?
So my name is Shady, and Slim Shady, he actually released the album very close to my birthday.
Okay, I didn't. Okay.
And so, yeah, so I showed up at the lunchroom and everyone's like, oh my gosh, real Slim Shady, and they started rapping. And so that's actually a big part of my like life. So
That's pretty fun.
yeah. And then like networking events, everything. Like
Definitely way to make it. I mean,
Slim
Shady's already a
Shady.
unique name,
Yeah.
right?
Slim Shady. So by default, I rap probably every minute.
So, Slim, what kind of the end of our talk? Can you give us any wisdom or advice or anything you want to talk about?
I'd say I'd like to like for folks to challenge like the status quo. My particular advice in that is like I never seen or would have thought like I would be in the circles and doing the things that I am now like 10 years ago, right? And the more that I pushed forward, the more that I was able to break down doors and glass ceilings. And so now like everything seems pretty limitless. And so for a lot of founders out there, they just feel like they're going to win overnight. And then most folks are not going to win overnight. It's like a 10-year journey. It's a 5-year journey. And I've seen folks that raise several rounds and they're still like needing to raise more rounds to go forward. So just, really believe in yourself, surround yourself with other folks that, believe in yourself, but also challenge you to be better. Because if you just have folks that literally are telling you that you're the best all the time, like you're never going to be that founder or get to that point that you're looking for.
Shady, thank you for your time today. Really appreciate it. This has been great.
All right. Thank you.
And to our listeners, thank you for your time as well. And remember to be great every day. All right, we'll stop.